Good morning, everyone. And the tech sector, the information services stocks, they continued their very steady march higher, almost relentless. But again, the eking out of new highs, it's becoming increasingly marginal each and every day. And it's sort of like a market's trying to rally but can't maintain the momentum. That said, there is still a lot of cash on the sidelines, and so for all we know, it doesn't matter what happens in the world fundamentally. People will keep having to buy stocks. If big funds around the world have these huge, massive inflows every month, even if they want to put 10% into the stock market, it still means further stock buying. That said, though, the elastic band, as we've been talking about all along, is very stretched now between the fundamental reality and what stock prices have been doing. So I think we have to be mindful of the trend is our friend in the tech sector, but I think we're already seeing almost emphatically, but not quite yet, the broader market that other stocks outside of that sector are tired, and many of those stocks are starting to roll over a little bit. So we're getting this real sort of stretch now, which we've seen previously, but again, it's just being highlighted ever so much by the daily price action that the tech sector has a slightly different life. And for all we know, in terms of the 20-30 year horizon, tech stocks should be 10, 20 times higher than they are now. But just in the current environment, there is still that delta risk. Despite vaccines being effective, it's not like the whole world's going to suddenly be vaccinated and everyone can go back to normal and start traveling around the world again. That's not going to happen. There's still delta risk. There's still government overreaction, perhaps, in terms of shutdowns. There's still that risk to economies. And there is also, although I'm not saying that's the case in Australia at the moment, just generally speaking, longer term around the world, and there is also the risk of inflation. Now, we saw US house prices continue to skyrocket higher, and everyone sees that as cause for celebration. May I suggest it could well be the case that we are seeing in the US the building of the second great housing price bubble this century. That's pretty quick. We're only in 2021 and we might be approaching the second housing bubble in terms of prices in the United States. Prices are still going up, but mortgage applications are sort of falling away, as are actual sales. So that too is again another one of those elastic stretching of the elastic band between kind of on the ground reality versus the sticker price ticker tape impression that is given by prices. So what if we have a second great housing bubble in the United States as stocks are overvalued and tired? That's not exactly a comfortable scenario for any investor at this point. But so I continue to suggest that diversification, not just stock holdings, particularly not just meme stock holdings, is the way to go forward, and certainly active management is the only way to succeed at the moment. Later today, I'm going to be putting out the ACY Economics Quarterly Report, and we're going to have forecasts there, but mostly about the Australian economy, but also a little elsewhere in the world like China, the United States, Europe, and perhaps the UK. So that's something to watch for, to look forward to. And I'll try and do a very good job of that for you. It will be a little bit different to what some of the other major banks and financial groups are saying, but that's where we add to the debate. And being part of the herd mentality is rarely correct, although it was over the last 12-month period. So on the day, Australian stock market is probably likely to get a little bit of a boost just from the idea that the US market made new highs, but they're only new highs by that much. So later in the day, the Australian stock market could fall back to earth just a little bit. And it is not out of that wide-ranging consolidation phase that we've seen for some time. On the currency front, the Australian dollar remains vulnerable. The US dollar continues to look firm. Just coming back quickly to the housing bubble though, just be mindful that those higher property prices are also going to place pressure, or encourage at least, the Federal Reserve in the US to begin tapering very soon. And my forecast for tapering, I'll give you that now, is definitely going to happen by the end of the year. It may even happen at the very next Fed meeting that they will announce they will begin tapering. So at the next 1 or 2 meetings of the Fed, I expect they will announce that they will be beginning tapering within that month, because certainly the US economy doesn't need that. The workforce needs it. US still has too high unemployment, but the economy itself and the inflationary pressures do not need that added sort of force of extraordinary bond buying that the Fed has been undertaking. So that's all from me for the moment. Watch out for that report this afternoon, and thanks very much. I wish you well for the rest of your day. Clifford Bennett, Chief Economist, ACY Securities.